Welcome back. Wow, 2020. It's in the books. It was an interesting year, and especially the mortgage world. I think it really benefited most people looking for mortgages. But the thing I want to cover in the next handful of minutes is there was a lot of misunderstood mortgage news. I want to really debunk those right now and just make sure you understand what actually applies to you specifically. So without further ado, let's get into the biggest changes in news of 2020, and let's dig into exactly how to look at that and what questions you got to ask your broker. So firstly, I'm sure you saw a certain bank drop the mortgage rates below 0.99, which of course is historic. It's ridiculous. Now, lots of asterisks. If you have over 20% down payment, which by the way, you want to have because it lets you not pay mortgage default insurance, that's saving about $18,000, you don't qualify for this. Now, the benefit of this is that it's actually giving us as brokers more leverage to get special rate exceptions with other lenders that probably have a better product for you, more suitable, and actually something that you qualify for. So this isn't bad. But remember, don't be bummed out if you can't get 0.99. Ask your broker, see what makes sense, see what saves you the most money. And this is great leverage where I'm getting a stated rate of 1.94 with a certain lender. And then on exception, I'm getting as low as 1.5, right? So there's a huge sort of like negotiation room that if you've got a good broker and if they're a high producing team, you can really win from that. So use that as leverage. And yes, it's a great time to, of course, be looking at rates. Now, alternative lenders, aka B lenders. A lot of people are scared of them. Two reasons why you should actually pay more attention to them. Firstly, you can afford about 50% more mortgage. So like literally from a $900,000 home, you can go up to that instead of $600,000. How much more are you paying? Generally, it's $200 a month, which if you do it for a short-term contract, most of them are 1 year, not a bad thing to look at. In fact, there's an entrepreneur that I work with, and he was happy to do a B lender, even though he can qualify for any bank he wanted. He makes lots of money, but he had a lot of debt with low interest rates, right? Which he wasn't in a hurry to pay, and he wanted to not settle on a home that wasn't a fit for him. So he's happily doing a year of a B lender, getting a great rate anyways. 1 year ago, banks were charging more than this, right? And because when you do the math, the taxes he has to pay, and also if he has to liquidate investments, right? That means he's not making extra income on Tesla stocks, for example. So really look at the strategy and the finance around the whole picture, and B lenders are as good as ever now. So that was actually really interesting to see stories like that. Now I know we're in a pandemic. It's pretty hard to save money. Some people aren't working, so a lot of people need down payment help, especially with properties going up. The minimum down payment keeps going up and up and up. Now, you are actually, there's some good news here, and something that people don't actually realize exists is that you can pay down payment on a line of credit only with about 2 lenders, right? So you can actually fix those down payment problems with actually using a line of credit if you qualify, and it's not too much debt on your personal balance sheet, as they call it. And secondly, you can actually get down payment help as a gift, but you have to inquire what the lender counts as eligible gift money from an immediate family member. There's different definitions for that, so make sure you inquire. But gifts, line of credit down payment, and cosigners, of course, are all things that really help. And lastly, if you're a first-time home buyer, lots of great programs out there that save a lot of money. This one especially, actually, I believe is a valid, usable program now, because how this works is that if you want to get your down payment matched by the government up to 10%, right? 10%, you can do that now, and your home can be as high as $720,000. At the beginning of the year, it was up to $500,000. So if you are living in Vancouver or Toronto, probably not going to be very realistic. So this is going to be changing in the spring of 2021. So if you want to lower your monthly payments and get down payment help from the government, this is a program that could work for you. Of course, keep in mind, they now own equity in your home. So if your home goes up in value, they're going to be part of that winning. So of course, discuss with your broker if that actually makes sense for you. But it is good news that it's a lot more flexible. Lots of false alarms this year, especially, you might recall, July 1st, the CMHC mortgage insurance company said that they're going to lower their credit score to a 680 minimum, and you're going to afford about 15% less than you could before. But guess what? They did that, by the way. But there's 2 other mortgage insurers who said, no, we're going to keep things as is. So if you have a credit score of close to 600, you're still eligible for a best rate lender. Just inquire if you're a broker, okay? All hope is not lost because there's a lot of mortgages to go around, and you just have to make sure you're asking the right questions. So this Stuart Butterfield, he owns Slack. He's a Vancouver entrepreneur. He also is the founder of Flickr. And he just sold his company for, I think it was $27 billion to Salesforce. And as he was growing his empire and just, as someone who was just self-employed, he likely wrote off a lot of taxes for business expenses, and he probably still does. Now, just like him, as you're going on that trajectory, you no longer have to worry about as much. Writing off income usually means you afford less. Best rate bank lenders look at your T4s and say, oh, you declared this much, we're going to give you a multiple of how much you're eligible for based off of what's on your T4. A lot of mortgage lenders that are not specifically banks, they're using these stated income programs, which are making a big comeback because of COVID, forcing more entrepreneurship. I think it's actually really good. And they're saying, hey, based on how much money goes into your bank account and what we think is reasonable for most people in your profession to make, we'll consider allowing you to qualify for the higher income, which is really good news. So now you can actually write off business expenses and save on taxes and also afford more. So do inquire about that. It's a really interesting program that you really got to kind of battle for and have a good pitch. If you own a home and you want to consolidate debt, there's expensive debt you want to get rid of. And you probably want to get a better rate because 2 years ago, 3% was a good rate. So now you can refinance, and even if you have a breakage penalty, I literally had someone I just helped. They had a $30,000 breakage penalty because they got a fixed rate. And I was like, make sure you understand that fixed rates are huge penalties. But they went through with their switch and their refinance. So they paid off debt, which was about $7,000 a year of interest. And they also got a rate that was more than half of what they had before. So after you deduct the $30,000 penalty, they're still $45,000 better off in the next 5 years. And they were very intimidated to even consider switching. But when we broke down the math, it was so obvious. So remember, don't chase rates. Don't be scared of breakage penalty. Just run the math. And if it makes sense, you can make a more educated decision. So I thought that was really interesting. So definitely refinancing is something that you should consider. And I'm sure you are. And it's something that is still very much in play. Now, reverse mortgages. If you are over 55 and you want to get lump sum payments coming to you either monthly or periodically, this is of course against your home equity. Reverse mortgages, usually were pretty high. Now they're as low as 3.49. So instead of going to a private lender or getting a certain line of credit, these could be a very good option for yourself or of course your father or your mother. So yeah, inquire about these. They're something people forget about, and now they're actually really an interesting thing to get into. And so with that, just to finish off the 2020 lightning round on misconceptions that I hopefully have clarified a little bit more. I always advise people, be entrepreneurial about your mortgage, because at the end of the day, you have to live with the consequences of the risks that you take. So you have your realtor, your mortgage broker, your real estate lawyer, your financial planner. They're all going to give you advice, but you really got to understand what questions to ask. So be entrepreneurial, reach out, always happy to help as always, and happy holidays and happy 2021. See you guys soon. Bye for now.